Welcome back to Fast Market on the Schwab Network, everyone. It's now time for our cash tag segment. For that, let's bring in the co-founder of Lightfolio.com, Mr. Andy Swan, to the show. Andy, thanks for hanging out with us on a Friday. This is good service out of you guys. So Five Below, this is a stock that I watch really closely because I think they have a very unique business model that gets them to break even on a new store really quickly and that allows them to get profitable. Now, they've been going through some macro struggles, as you know. Is that kicking that news out? What's your data say on Five Below? Is this stock salvageable? Because it's more than 50% off its highs, Andy.
Yeah, they faced some macro struggles, and they also amplified those macro struggles with some of the decisions that they made in response. And what I mean by that is, a few years ago, 4 or 5 years ago, Five Below was a place that, teenagers could go into, with a few bucks and get something cool, or parents could take their kids in there and say, yeah, go get anything you want because everything was $5 and below. But when inflation started to kick in and people started stealing more from their stores, the company responded by really broadening its offering, by going to higher price points to try to get those margins back that were missing. And it turned into a never-ending chase because people didn't really want to go into Five Below and buy $25, kind of knockoff items or junk items. They wanted to spend the $5-10. And so they lost their way with their customers a little bit. I think the company's done a good job of admitting this. And so they're in a little bit of a turnaround and going back to their roots. And I think that's the right plan. But what we're seeing so far is that it's working, but it's going to take some time. If you look at consumer happiness levels for Five Below when compared to other discount retailers, it's still very high. They're still better than their competitors at making customers happy. Dollar Tree, Dollar General, both struggling in that regard, and Five Below still doing a good job. It's just not as dominant as it once was. So we think, overall, I think Five Below, they're slowing down the pace of opening new stores. They're getting refocused on kind of that original vision that got them the market penetration that allowed them to open those new stores so quickly and so effectively. And so I think over time they'll get there because we love the vision that they have for the company now. But it's going to take some time because the missteps that they made were pretty substantial in both the inventory that they were bringing into the stores, the way that the stores were configured, and how they marketed to customers. And so they have to fix all of those things. But it looks like they're on the path to doing so.
Andy, it looks like Five Below and Dollar General both took the same page on the same playbook. I mean, Dollar General had the same situation where they tried to double down on consumer discretionary and get away from staples as much as possible. Let's talk about all three really quick. Dollar General, Dollar Tree, Five Below. Which one do you think could recover the quickest when it comes to the fundamentals or maybe stock price appreciation?
Yeah, I think it's definitely Five Below. I think they have the lightest load to lift, and they have the clearest vision to get there. I think Dollar Tree, Dollar General, they've gotten into some areas that are very difficult. There's some grocery factors happening in some of these places. There's a demographic overhang that they have to deal with. Whereas, I think Five Below is in a little bit better spot. Like I said, they have a little bit more nimble of a ship to turn around and a clear direction on where they're going to go. And that combination is usually good for turnaround stories. Whereas, I think Dollar Tree and Dollar General have a significantly more difficult challenge ahead in terms of both turning their ship and knowing where they want to go.
Kevin Green touches on a good subject there, Andy, the comps between Five Below and Dollar General. And, the comps aren't great for Dollar General. Five Below has bigger growth, high single digits versus mid single digits in terms of growth. It has higher margins, 11% versus 6%. It trades a little more expensive, but it should, based on their growth projections. So the fact that these two are comparisons, and the fact that they're starting to see some bottoming in the number of transactions and the average ticket size, both that dropped as same-store sales dropped 5.7%. All those metrics were driving, but they look like they're firming up. And the consumer happiness is a real number that Likefolio tracks, and it shows that Five Below's in a better spot, Andy.
Yeah, that's right. If anytime I'm going to bet on a turnaround story and I have three options like this, consumer happiness is the first place I'm going to look, and especially when it's this pronounced of a difference. I think Five Below's in the right spot. They're starting to make their customers happy. That customer base has dwindled a little bit, but they can get that back. Their locations are in great locations. They have a good demographic base to sell into that isn't as hurting as their competitors. So the economic headwinds, they can penetrate those, I think, better than their competitors. So if you have to go with one of the three, I would definitely say Five Below. But if you don't have to go with one of the three, I would say it's okay to sit and wait and watch for a little bit more data as well, because all three of these are in a tough spot. I just think Five Below's got the best way out.
Andy, because in suburban Chicago, right near my home, they moved from a lower traffic mall. They moved their space to a higher traffic discount mall with Nordstrom Racks and all the discount players. They moved into that mall. That right there is going to help them in terms of overall traffic in the area, because the people go into that mall, that's what they're looking for. So really good point on the locations and how important they are. Andy, thanks for coming on, as always, spending your Fridays. We always appreciate the Likefolio data.